All right, good morning and good evening to everyone. Thank you for joining us for our second reverse pitch here today. Excited to present Leib from Grayhawk Capital here in just a few minutes to speak with you. And obviously you can ask him a bunch of questions that you have as well. So definitely excited for that. So that will be our reverse pitch for today. So a little bit of housekeeping rules to cover here before we get started. I just wanted to let you know that everyone's going to be muted, but I'll give you the ability to unmute yourself within the chat, or if you raise your hand in the chat feature, and I'll go ahead and give you the opportunity to speak up, ask your question, or make a comment to either myself or to Leib at that point. Also, there will be a Q&A session at the very end of Leib's presentation. So in case that you come up with something during the event, you didn't want to disrupt the flow, or for any reason ask your question during the pitch itself, you're definitely allowed to ask the question at the end, and I'll give everyone the opportunity to speak up at that point. So we're going to keep the entire conversation relevant for what it is Grayhawk Capital is speaking about. And obviously he has a lot of different topics to cover, so we'll definitely have a lot to be speaking about today. As well as when you jumped on the call, it is being recorded. So at the very end, we'll be able to give you a copy of the entire chat from today. In case you're taking notes now and maybe you missed something, you'll definitely have the opportunity to see what happens later on. We're going to keep the pitch at about 30 minutes in total. Then the Q&A session will be afterwards, about 15 to 20 minutes. We're going to try to cap it at about 1 hour. So at the top of the next hour, we should be just about finished with that. And then afterwards, I'll have an email to all of you who've attended, which will have a recording of this session. A little bit about us, in case you aren't sure of who we are. We're the Israeli Economic Mission, which is part of the Foreign Trade Administration, a branch of the government of Israel. There's 45 offices globally. So our goal is mainly to help Israeli companies gain a presence in different markets around the globe. So we are trying to attract investment from the markets geographically all over and bring that to Israel. Our office in particular, we cover 17 different states in the US. There's also an office in New York, one in Houston, one in DC. So how are we helpful for you? We throw on exhibitions, which is great for individual industries. We can do inbound delegations to the US of Israeli companies, meeting corporates, investors, or different partners here, or outbound delegations where we actually bring all those same partners to Israel. We also work on scouting projects, which are for different investment firms, corporate ventures, or different corporates, where we incorporate companies like yourselves into assignments that we do for them, trying to figure out what new technologies or projects that they're working on internally as part of their initiatives. And we help them discover, Israeli companies that they would have never found before. And then obviously there's the feature of one-on-one, where you apply on the governmental website, and then you get connected with one of the offices globally. Obviously, if you work with us, you'll get myself or someone else who works in our office. For me, I work with investors, and I also cover the fintech and enterprise categories, as well as a few others at the moment. For us, our biggest advantage is our warm network. So we know a lot of contacts here in the West Coast in the 17 states that we cover. Also, of course, within Israel and the East Coast of the US, the middle of the US as well. So it's quite a vast network that we have, and we know contacts everywhere. This can be C-suite level, IT managers, VPs, business development, etc. We definitely have a lot to cover for that.
All right, good morning, everyone. Boker tov, Erev tov. Can you hear me, Randall?
Yes.
Great, excellent. Thank you so much for joining, everyone. My name is Leib Bolel. I'm a partner at Grayhawk Capital. I see some familiar faces on today. It's good to see you all. And really, happy to join you with the Israel Economic Mission to the West Coast in providing a different, out-of-the-box, different type of presentation. So I'm in your shoes today, everyone, and I'll be pitching you on our fund. Normally it's the other way around. We see about 700 companies a year, invest in about 2 to 4 companies. And my hope today is, firstly, is hopefully you can come away with you can call it a perspective from on the VC side, is how we're looking at companies, what we're looking for in companies. And hopefully this is going to be a resource as you go down this journey. I know there's some earlier stage companies on the call today. There's some early growth stage companies, very different company life cycles. They have different approaches, different strategies, and different focuses when it comes to raising capital. So Grayhawk Capital, I'm going to walk you through a little bit about our fund. And my hope is today is primarily education and to be of resource. I know the challenges of coming from Israel. I lived in Israel for 7 years. Coming to the US, some of you are traveling here very frequently. Some of you are wanting to travel. It could be because of COVID restrictions that it's challenging, or the challenge could be is, where do you travel to? Which region? Is it just the direct flight to San Francisco, to the Bay Area? Are you going to New York? Or there's an entirely whole other area of the United States that you could be looking at that has capital to deploy and specifically has interest in Israeli technologies and investments. So I'm normally, presenting about Israel. Like I said, I lived there for 7 years, and beyond the Bay Area and beyond the East and West Coasts, there's a significant opportunities for raising capital, and hopefully we can be a resource to you, whether it's on the investment side or just in terms of if you're looking for a sounding board, if you're looking for introductions. That's definitely something that I would be very happy to be able to help you with. So moving into our fund, who are we? Let me see if this can move here. I am seeing why this is not moving down. Bear with me a moment. And this was, here we go. So this is a little bit about our fund. We're a very experienced fund. We've been around since we were established in 1999. And those of you who follow or have done research in terms of venture capital history, 20 years in the industry is a very long time. The majority of funds have been founded in the last 10 or 15 years. And there's a growing number of venture funds. And one of the most important things, just like an investor is going to be asking you could say a company about their revenues, what's their track record? And this should be a similar question, bearing in mind, maybe not the very first time, because as VCs we expect companies to do their history, but it's definitely something that you want to be able to consider. What's the performance of that venture capital fund? Because if they don't have a good track record, then maybe are they the ones that you guys want to be partnering with? And so from our side, we obviously are consistently measuring benchmarks, measuring metrics. And we've been around for, combined experience. We have probably now close to 85 to 90 years of experience within our partnership. We've managed now over 10 funds. We're going into our 11th fund. And our partner returns is north of 3x and 26% IRR, and particularly of relevance is a hit rate, meaning that you see this number on the right-hand side of the screen of 68%. That means 68% of our companies we are getting a positive exit from. The regular benchmarks, specifically in early investing, and you can call it even Series A and Series B, which is the series rounds that we generally focus on. but I would say that's very much semantics, because there's some super creativity today in terms of labeling rounds. You know, you could look at seed, seed plus, seed plus plus, seed triple plus, A1, A2, but generally what we're looking at are companies that are generating $2 to $6 million in annual recurring revenue. I know that there were some questions about, you know, why significantly, you know, what's specific about these parameters. And, you know, maybe I'll just explain just the thought process that goes through our side and the methodology, and you can call it the investment philosophy of investing in companies that are, you know, you can say coming close to 2 million and, you know, not exceeding 6 million. Companies that are generating 1 million in recurring revenue, and that's primarily the models that we're looking at. We're looking at SaaS-based companies, and companies that are generating 2 million in recurring revenue. There's a significant difference between them. And the difference is this. A company that's been around for, let's call it 2 years, 2 to 3 years, and they're generating $1 million in revenue, or a company that's been around, let's say, for 4 or 5 years, and they're generating 2 million in recurring revenue. The difference on our side, you know, diligence is an extremely rigorous part of our investment process. And being able to reference as part of our diligence customers that have been with the company for 1 year, more than 1 year, is there's a significant depth to the types of conversations that we can have with the company's customers in understanding how their relationship with this company is. A company, let's say, that's doing $1 million and they've got a number of larger customers but have been with them for not yet a year, those are not as in-depth conversations that we can have. So that hopefully will give you a little bit of perspective of why we focus on that $2 million in recurring revenue. Beyond 6 million, that's, you know, there's definitely a larger and growing market, and we can even call it frothy in terms of, you know, private equity coming down a little bit, valuations going significantly up, and just on the types of checks that we cut. A company that's going to do 6 million in recurring revenue, we're generally cutting a first check of about $2.5 to $3 million. The economics don't work out specifically in terms of equity involved. So that's just giving you a little bit of perspective in terms of why the 2 to 6 million is our focus. Going back to who we are, so the metrics are an incredibly important part of when we are working with companies. We obviously want to make sure that they're a good fit for our portfolio, and likewise, we expect companies that are coming to us to feel that we are going to be a good fit for them. And the hit rate's particularly important. You know, general venture capital industry benchmarks is that there's a 36% hit rate, which means that 36% of companies in a venture capitalist in a fund's portfolio are returning more than the capital that was deployed. And on the economic side, that means that they need to have a number of, you know, 1 to 3 unicorns in, let's say, a portfolio of, let's say, 15 companies. Now, there's obviously significant risk in that, both on any company that's going into such a portfolio, in addition to a fund that's bringing on a new company. You don't want to get bogged down by these numbers. My point on this specific subject is, it's important, and I would encourage companies, when they're looking at investments, see what the success rate is, see who they've sold to, see who, you know, could be on the private equity side. If your strategy is going to be on the strategic acquisition side, that's also something you want to be able to see some of those. You want to be able to understand, and there's nothing wrong, and don't be afraid to be able to at least garner and understand who this portfolio that you may be working with is. This is a little bit, this is our team over here. We've got Brian Burns, Sherman Chu, Brian Smith. We're all based in Arizona, Phoenix, Scottsdale, Arizona. And we invest primarily west of the United States, and I'll show you just in a little bit in specific areas that we tend to invest. We are very agnostic to the geographies in the United States that we invest with. And I'll go a little bit more into the Israeli investment side as well shortly. We generally, our investment strategy is we look at, you can call it emerging tech markets, so we're not running after deals in the Bay Area. There's plenty of capital there. And frankly, valuations are significantly higher. If we look at emerging tech markets, or we can call them undercapitalized tech markets. So you may think of Texas, Colorado, Utah, Arizona, Southern California. You look at Seattle. These are all areas of where we've been in the markets for a long time, have significant relationships there. And we generally see, you can call it even a discount of about 20 to 30%, maybe sometimes more in terms of valuation, if you're going to take the company from that geography and you're going to put them side by side with a company coming out of the Bay Area. And so on our side, it makes a lot more sense. And frankly, as well, companies that are raising you can call it a very large valuation. There's pluses to it, there's minuses to it, specifically in terms of the probability of potentially positioning that company for a down round, which no one would like to do. And therefore, we feel we get very fair market valuations on companies, and being able to assist those companies in those growths to be able to be as successful as possible. We investing generally, 2 to 3 million initial check size. We could deploy 1x or more in subsequent rounding funds, and we're here to be able to go through the good and the bad or I'd say the good and the challenging processes of companies' life cycles. And you can say fully deployed. If we invest in a Series A round, then companies can expect us to, capital on our pro rata and plus more, and we'll generally reserve, an additional 1x or possibly more into subsequent rounds. We're always syndicating our investments. We'll never be the only investor in a round, and that's both on the when we lead deals, and we lead deals the majority of the time. About 85% of our investments we're leading, meaning that we're setting the terms and the term sheets. And then there are participations from other VC firms. And we'll be taking board seats when we're leading them. Really what that does is it mitigates a lot of financial risk. In addition, it brings more resources to the table. So I can give you an example. We are currently in diligence with a healthcare IT company, and we're you can call it in the latter stages of a term sheet. Our term sheet is going to be going up against, you can call it a private equity deal, who are offering them a significant amount of capital more than we would be, and at a far higher valuation. Their CEO is inclined, and this is in real-time process, so it's all exciting. Their CEO is inclined to actually come with us for less capital and a lower valuation, simply because we can bring incredibly strategic funds in the healthcare sector to the table. And that is more significant to them than just capital alone. So when we are collaborating and we syndicating with partners, it's not just a matter of bringing capital to the table, it's a matter of bringing the right capital to the table and the right resources to the table. And if you think about it from a company perspective, do you prefer to be just sitting on capital, or do you prefer to be sitting on capital and the people behind the capital are the ones that can open doors, are the ones that can get you those, whether it's going to be a joint venture, whether it's going to be your largest customer. So we see that as very strategic, and one that can benefit our companies the most. I mentioned before, we're active involvement. We generally take a board seat, at the very least, we're taking observation rights. And we're an observer. We're a board observer with non-voting rights. Like I mentioned to you, we're comfortable taking an observer seat when we're syndicating, because we generally have a good understanding. We're either co-investing with funds that we've co-invested, over the last 20 years, and we have aligned visions, aligned missions, and you can even call it, an aligned heartbeat with the management of the CEO. So we're comfortable doing that when we are participating. And generally, our investment horizon, we are exiting companies generally on the low side 3 years, and on the high side 7 years. You can say give or take. We've had companies that we've exited in 2 years, and other companies that we haven't exited for 9 years. But in the general, the general investment horizon is about 3 to 7 years. Our target profile of companies, we're looking for disruptive software. So if you think about, I mentioned healthcare IT, cybersecurity, fintech, business productivity, analytics, you just call it the large suite of software that's needed to enable and drive large enterprise. That's who our profile and portfolio of companies are. And I mentioned to you the early growth stage is we've got 2 to 8 million over here. But it really depends on their growth, how fast they're growing. We're looking for capital efficient models, and generally SaaS companies tend to have SaaS companies in this area are highly capital efficient. The ability to be able to the burn versus versus revenue, in addition to the capital raised. There's a lot more to say about that than you talk about any other sectors, whether it's going to be life science or if it's going to be healthcare devices or medical devices. And I think I'm preaching to the choir in terms of capital efficiency here. We're definitely looking for a large potential market size. So we're looking for at least $1 billion in potential revenue. I mentioned to you the geographic areas that we have invested with, and you can see the majority of it is west of the Mississippi. But you see we do have a small, and these are all much more recent investments. So you may be familiar with Profitect. That was sold to Zebra about 18 months ago, 2 years ago. Totango, which is in the Bay Area, and Follows as well, which is in Northern California as well. But if you have a look at just the rest of the map over here, you should get a good understanding. We've invested in 58 companies in the past. And it's hard for us to be able to put everything onto this map over here, but perhaps there are some names that you are familiar with here. And I'll just say, just as a matter of note, I was looking at the attendees on this call today, and the majority, I think, if not all of you, do not currently have a US presence. And ultimately, as you grow, you're going to be considering where is the most strategic and valuable place to be able to set up office? And I understand there's many considerations that go into that. But I'm always happy to be a resource, like I mentioned at the beginning. There's a whole map and a whole country over here of where it could be worth consideration. I'm going to be a little bit selfish over here on the Arizona side. I think Arizona is an incredible state. I know that a number of you have actually visited here. Just as a side note, I think some of you I do know from, I run a group called the Arizona Israel Technology Alliance as well, which is a nonprofit where we've had a lot of commercial interest. We've had, Arizona has about 36 Israeli companies here, up from 11 in 2017. So Arizona is always definitely a place, that I'm always happy to talk to companies that are looking to relocate to the US in terms of the market, in terms of all the other considerations that come into moving. But that goes both in terms of where you're thinking about to relocate, and you think also in addition of where you're looking to raise capital from.
And Leib, I just want to butt in here with just ask a couple questions from the chat, sure, and then I'll let you continue. First question, I think you just touched on it a little bit, but it says beyond the hit rates that you have, what is your value add to companies? How do you help companies achieve those results? So I guess how do you manage? How do you work with your portfolio companies?
We've got a slide coming up, Randall. Okay, we can look at that in just a second. Anything else, Randall?
Then this is the second question. I guess it's more of an open question. are you open to early contact towards future investment rounds? So if it's too early.
Absolutely. Yeah, no, yeah, absolutely. You know, we do have, there's a slide in just a couple of slides that will show, you know, that can demonstrate the types, you know, I would say the quickest type of investment that, you know, they'll generally be about 10 to 12 weeks from the first point of contact. But for us, it's, you know, companies that are having month-over-month growth, and they see themselves relevant for a conversation. I would say in 18 months, anytime between 18 months from, you know, from the time of contact. That actually is probably one of the most important things that I can encourage companies to do, is to have that early contact. And this is the reason why. It could work to your, hopefully your, you know, company's gains, and actually it could be detriment as well. So, you know, it's going to be for the company to decide whether they want to have early contact. The upside for us to have early contact is to get familiar with the team, to get acquainted to the team. You know, in this, you know, in relations to this conversation, I'm, you know, prior to COVID, I was in Israel about 5 times a year. I should be back there this year in November. But getting acquainted and seeing those metrics and seeing what they're doing, and even though we know that it's not relevant for an investment straight away, and the company knows that it's not relevant for an investment straight away, if we have that information that the company is relaying to us, and then when it does come to the time of investment, and they're able to relay to us current information, as a VC, we're able to look back and say, they projected 18 months ago that this is where they're going to be. Did they hit those goals? Didn't they hit those goals? Was there pivots in between? Could be for the better. It might be challenging. But if a company is going to reach out early and they feel confident that they're going to hit specific metrics, and then 18 months down the road, it could be 9 months down the road, it could be 3 months down the road, they're doing what they said they're going to do, there is immeasurable value in that, because we're looking at it and saying, these guys have said this is what they're going to do, and they've actually executed on it. Now, the downside of that, and I've had this many times, is when a company, they actually forgot that they sent us a deck 2 years ago, and they'll send us a deck and they'll tell us that they're going to be, let's say they're generating, you know, let's say 1.5 million in ARR. And their projections are that within 5 years they're going to be at, you know, 50 million or 100 million. And they forgot that they sent us a deck prior to, you know, 2 years beforehand, where they had that same metrics, but they're still doing the same ARR. So, you know, I would say definitely reach out. We always want to be able to, you know, we're always looking to talk to founders, see if we can be of resource to them. And definitely if there's an opportunity on the investment side, I would say absolutely reach out. Connect with me on LinkedIn. You can email me. You can connect with Grayhawk on LinkedIn. I would say those are the 2 primary places in terms of anything related to Grayhawk, but always open for conversation, always open for, you know, for discussion. Anything else, Randall?
I think we'll save the other ones for the rest. Okay.
So just in terms of our, you know, we're looking for experience management. You know, we've got a strong record. You know, we've got a proven approach and really an attractive market and very enhanced returns as well. That's just a little bit on our side. This is coming back to your point, Randall, in terms of, you know, what's the process. You can call it, this is in a very fast case scenario. Week 1, there's deal generation. Week 2, there would be preliminary due diligence. Then there's going to be company visit. Week 4, there's going to be, goes into a little bit of detailed due diligence. You know, you have term sheets, and followed by final due diligence, followed by documentation. And then, you know, looking at the value creation. And then we go ahead with, you know, on the execution side. Just in terms of resources that we bring to the table, in terms of other funds, you may be familiar with some of these funds here that we've invested with, and some of the organizations too that we are associated with. We've had 26 acquisitions on the private side, including 6 IPOs. Some names I'm sure people are familiar here with. On the cyber side, McAfee. We've sold to Cisco, BT, which is British Telecom, SurveyMonkey, Siemens, and this is just a sample. And we've taken 6 companies through IPOs, and likely having a 7th one in the near future. Here we go. Okay, so the question that Randall asked was, okay, so what are we doing for companies? So taking an active board and committee involvement. So we remain very close to executive management, guiding them, mentoring them. A lot of challenges come up, so we're very accessible, and at the very minimum, we're having a board. We're having a board meeting, whether it could, in some cases it's monthly, sometimes it's bi-monthly, it depends, but we are very active. We do not take any operating roles. It's really going to be on the resource side. And a classic example would be COVID. When COVID came, companies just did not know what the future predicted, and frankly, we didn't know what the future predicted. What we did know is that we've been through 3 different economic down cycles. So how to be able to manage either layoffs, downsizing, how to be able to access PPP funding. I don't know if you're familiar with some of the government funding that came in. These were all areas that we were working day and night in terms of being able to assist our companies in being able to manage, mitigate. It could be opening doors on the customer side. And frankly, subsequent funding rounds, bringing the right VCs to the table on that side. We do go and generally assist management on filling out executive spots once we go through with the funding, and just rounding out the executive team if there are a couple of spaces that need filling. Partner customer development, financial analysis and reporting, and these are going through the mergers and acquisition side. There is, I could tell you from what our companies have told us, working with a firm that has been there, that has done it successfully, rather than working with a firm that has not done it before, or maybe done it once or twice, or even if they've done it once or twice, the people there hadn't done it, is of significant value. In terms of the capital markets, professional resources, and I mentioned number 4, management team and augmentation. This is some from a little bit about our portfolio, just over the last year or so. I'll just share with you some of the highlights that you may be familiar. Lucid Software, which is a visual collaboration, they just raised $500 million at a $3 billion valuation. We were a seed investor. We were a Series A investor there. Sochi, which is it's more of an app listening software platform, recently raised $80 million. And I mentioned as well, Profitect I'll mention a couple of the Israeli companies. Profitect, they were based out of Boston. All of our companies still have, all of our Israeli companies still have their R&D in Israel. They were acquired by Zebra and Tatango, and Follows. Tatango's on the customer success side, and Follows is on the account-based marketing side, our other 2 Israeli founded investments. I'll wrap up very quickly. All of our investments are, that have Israeli affiliation, are going into companies that either currently have or will have a US presence. And one of the reasons is the capital. I would say some of the capital, we are a leverage fund, which means that the government provides, this is a very, very difficult. There are only 7 other funds in the United States, and not all of them in our asset class, that are able to capitalize on leveraged capital, on private capital. And the premise of that leverage is to be able to drive successful investments and job creation within companies. An incredibly difficult process to go through, but we are, difficult from the perspective that not many funds would be able to qualify for this leverage capital, simply because the criteria are seasoned management, strong returns, and a number of other areas. But we've helped a couple of our Israeli companies re-domicile, go through that process, and assist them with the setup of their offices where they feel it's best for them to set up. So that's hopefully educational on your side, a little bit about, of information, hopefully that has been useful and beneficial. always happy to talk to companies to see how we can help them. If you're raising capital and you feel that our firm may be a good fit for you, please reach out. Always happy to have a conversation. Thank you so much.
Thank you, Leib. That was fantastic. Definitely insightful into learning about the types of companies that you've invested in and seeing their successes. I think it's of note that the way at the beginning, the IRR you said that's higher than normal, which is impressive.
Well, you know, if I'm going to brag, our current fund under management, we're about 34% IRR, and we're going to return about 6x to our investors.
That's, yeah. I mean, if you're doing well, I mean, it's might as well mention it at least once. But yeah, just a few questions on my end. I'll definitely open it up to the floor here for other people to ask. I guess the first one I have is, what's the best way to reach out to an investor or just a VC in general?
So let me take that a little bit step beforehand. Do your research. Make sure you're reaching out to the investor, the right investor. I get this on a daily basis. You know, yesterday I got probably about 2,000 word email from someone that really had no relevance to that would fit any of the parameters that we would invest in. I would say the most important thing is find the right investor that you know fits the profile and stage of your company. That's number one. Number two is, if you can get a warm introduction is going to go 1,000 times faster and smoother and more receptible than just an outreach. You know, there's so many hours in the day, and it's a very, very challenging, and I can't tell you it's going to be it's the right thing of what's happening. But the fact is, if I have, you know, 20 companies that I'm looking at in a week, and 3 of them have come from other investors or people that I know or friends, then that's going to be the most important. You know, that's going to go a lot. I'm going to spend more time on those ones that have come through warm introductions than just an outreach. So if you can find someone that knows someone, I would say absolutely, you know, hold off from an initial outreach. And then, or you could be proactive and say that, you know, this is who we are, and then maybe a second angle is from someone more.
Perfect. And then I guess just as a follow-up to that, you know, when you receive the information, what makes a good pitch deck? Like, what are you looking for in there that makes it interesting or worth your time?
So there's an acronym that was established by the US Navy in the late 1980s. It's called KISS. Keep it simple, stupid, right? You know, for me, what works, and I think it might work different for others. I've seen very extensive executive summaries, which I do go through. But if I have a very clean deck that demonstrates the problem, the value proposition, the market, you know, the revenue growth, and also I would say keep it, you know, well branded, that really fits with what your company is, and somewhat visual. You know, that makes it so much more of a pleasure and a great experience for us to be able to go through those types of decks. So keep it nice, clean, simple, not too long, not too short. You know, because if there's interest there, I'm sure the companies have data rooms for us to be able to dig into, or there's additional documents, or more of an extensive slide. And I would say, look at creating 2 different slides. Create a, you know, you can call it an initial slide with the basic information on, and if they ask for something additional, or you tell someone you're going to send them something additional, they could be something larger in terms of content. But I would say you just keep it simple, nice, clean, with the right information on it. Yeah,
that's definitely good advice. And then I'll just ask one last question here that's someone asked in the chat, and I'll open it up. And everyone, you are able to unmute yourself now if you wanted to ask a question. So this is from Eric. It says, when you are looking for an Israeli originating company to have a U.S. presence, is there a preference for the type of incorporation that they were to have?
I mean, you know, generally they're going to be, you know, Delaware. You know, they're going to register in Delaware and you know, be you know, a C corp or an S corp. It really really depends. But you know, there's those are generally the two that are going to be the primary incorporated entities.
Perfect. Yeah, I'll open it up to the floor here. I'll let you guys take a few moments to ask some questions. And if we go a little bit without a question, I'll go ahead and ask another one, but I'll let you guys take the floor here.
Hi, Leib. This is Rafi Zak from EcoCare.
Hi, Rafi.
I will be happy to hear more about your interest, generally speaking, in the healthcare arena, if you can elaborate a bit.
So yeah, so we do have a very strong healthcare IT portfolio. Generally, I mean, ones that you may be familiar with is one that we invested in probably about, I think, 4 years ago. It's a company called eVisit. They're in the telehealth sector, and they're actually based in Arizona. And generally speaking, and I should say as well, we have a significant amount of LPs, investors, who are executives within the healthcare sector. So if you think about the CEO of large healthcare networks and hospitals, we look at our LP base as of significant value, both in terms of deal flow and in terms of diligence and vetting companies. And they can actually be of resource as well to our companies as well. So if you think about names of Banner Health, if you think about Blue Cross Blue Shield, Phoenix Children's Hospital, and there are others as well. We look at this. We look at the healthcare sector from a holistic perspective in terms of where are our resources and where are the markets, and both of them align very well. And specifically, I would say on the healthcare IT side, COVID expedited a lot of things that were going on just became, and there was going to be adaptation, but we were probably going to bank on it being 4, 5, 6 years down the line, but that was expedited significantly. So I don't specifically focus on healthcare IT. My partner Brian Burns, he is the one that leads our healthcare IT portfolio. And if it's a relevance for a discussion, we can definitely take that offline and connect.
Thanks. I will send you an email later on.
Thank you, Rafi.
Thank you. Thanks a lot.
I think Eric had a question here.
Okay, I'm going to ask a little more controversial one this time. We get mixed recommendations when talking about the management team, the founding team. Do you put down in the deck and in the introductions past successes and failures at running startups, or do you leave that for the discussion? There's kind of
I would say, Eric, thanks for your question, Eric. I would say if there are successes, great, put them down. If there are successes and failures, there's nothing like having someone who has gone through it and failed. Everyone, there is no person out there that hasn't had a failure. So someone who's putting down his successes, we know there's failures as well because we're human beings, right? So that's just the natural tendency. So those are good starters for conversations. I would tell you that if a person has only had failures, don't put them down. If a person has had successes and maybe some failures as well, I would say, keep it to a ratio of about 80-20, 80% success, and, those conversations will come up. But, you need to think about, and I think this is also a really important point, Eric, that you bring up, is that there's a lot of psychology involved, right? We're all people, we're all, just flesh and blood. And the way that we think is we are in a business of making decisions or perceptions based on the information that's given to us. I would say always put your best foot forward. And I think if you're looking for an investor that is going to embrace those failures, and we would definitely embrace, we've got founders that have failed a number of times, had successes as well. I would say if that's the type of investor that you're looking for, that may be a mechanism for you to weed out who the right investors for your company is. But it's just something that you need to give some thought to and see whether that's something that you wanted to, calculate on.
Thank you.
Maybe a quick question from my side. First of all, thank you very much for your time and the information. I am founder and CEO of a tech company in the agriculture space. And I want to ask you, generally speaking, about the service provider business model. What's your view on a company with a service provider business model, service based on a proprietary technology that was developed in-house, right? It's not just buying equipment and providing services, but still with all of the complexity around being a service provider. What's your view on that?
So are you talking about service providers on the software side, or does it include hardware as well?
Including hardware.
Including hardware. So, I mean, if it includes hardware and it's proprietary, as investors, we generally wouldn't invest in hardware for a number of reasons. We talk about production, supply chain. There's reasons, not that there's good and bad. It's just different. Generally speaking, I mean, service providers, I mean, there's a whole, there's a huge market out there on the investment side. We as a fund don't invest just on the service providers. You talk about margins, you talk about other areas as well. And it comes down to, again, it's not good and bad, it's different, and where the comfort levels and track record is. But I mean, specifically on the ag side, we haven't done investing on the agriculture side in the past. Not that we wouldn't. We definitely, I've definitely seen a number of companies, and the right opportunity came along, we'll definitely take a look at it. But I'm actually quite familiar with ag tech, as an industry, and what we're seeing on the ag side. There's number one, significant capital going into the ag side, and Arizona is. I'm sure you're familiar with Yuma and other areas. And right. There's a huge adoption. It's a very, very exciting vertical, one that I'm looking closely at. But so my view of it is, you've got the right solution based on based on a service model, and it's got hardware involved. There's definitely a huge opportunity there. But does it fit into Grayhawk? It wouldn't fit into Grayhawk, but I'm happy to have a conversation to see if I can help you locally here.
All right, thank you.
I'll jump in here with a quick question while other people gather their thoughts here. So let's say that they secure a meeting with Grayhawk. What's the best way for them to prepare for that initial call that they have with you?
Now, I would say, initial numbers are going to be so important, because the worst thing that can happen is that we have a first conversation, and then we spend 2 weeks of our time and they spend 2 weeks of their time, and then we just see things don't match up. So just the facts should really be the facts, and they should be able to quantify, they should be able to quantify and validate everything that they are relaying to us. I would say that should be a precursor to any conversations that they're having with anyone. I always find it beneficial to find something a little bit more on the personal side, right? Something that can intrigue someone. Whether it's going to be about about themselves personally. People are integral. We feel that you can have a great management and a mediocre product, or you can have a great product and mediocre management. We much prefer to have a mediocre product and great management, because you can always improve the product. You can't always improve the people. So find things that are going to maybe resonate. Find past investments that they've done in a similar area to be able to make a case and say, it's not something new that you're looking at. This is what you've done in the past. This is right now. I'll give you an example. We have a company out of Boston that out of New Jersey that reached out to us. And in the first conversation, they said that they are in the middle of a project with another one of our portfolio companies. That went a long way. That small comment went a long way. So I would say try and find some nuance, make that conversation personalized, a little bit different, not what the person, not what the fund is typically expecting to hear. It should be relevant though. Not that they climbed the Alps and it was a great experience and they saw a meteorite shower, but just something that is going to be, relevant. Humor goes a long way as well. But I would say find something that the investor knows that they've done their homework as well.
It looks like we have a question in the chat here. It says, hello, this is Dan Anzo from Neuro Audit. What about neurotech technologies from the intervention side with long ROI for the investment and deep science side? So I'll let you take that.
Yeah, I mean, on the neuroscience side, we haven't done a lot of deep technology. A lot of the technology that we do, and just like most companies, they've got AI involved and they've got ML involved. But in terms of the heavy deep tech, that's not something that we've invested with in the past. I don't know how much huge value we can be on the resource side. Very possibly in terms of, like I mentioned, the network that we have, there may be benefits there, but I would say internally as a team, as a management team, it's not an area we've spent a lot of focus on. Obviously, there's no good, there's no bad. It's just a matter of where the focuses are.
Perfect. I'll ask one last question here, then I'll let any other last questions here. We're coming up to the top of the hour, so we're almost finished here. Yeah, do you have any sort of pet peeves for your first calls with startups? Things that you want them to maybe avoid?
Make sure it's relevant. That is probably, make sure that the investor that you're reaching out to could invest in your company. A company that comes to us and they're doing hydroponic farming, and I need to take 30 minutes to talk to them about, I don't pick up the phone and I hear that they're talking about something I know we're not going to invest in. I try and be helpful to them. But I would say that companies, do your homework before meeting an investor. Make sure there is relevance. But there's a caveat there. If there could be a strategic call, you could be getting on a call, you asked me at the beginning, even if it's not relevant now, I like those introductory calls, right? But there should be a purpose to it, and know that there's potential alignment somewhere. There is an area where that wouldn't apply, and that would specifically be if you are reaching out to them for them to be able to make an introduction to someone else, right? So a company that's doing hydroponic fish farming and they reach out to me, but they know that I know someone else, I'm very happy to take that call. But I would just say, make sure when you're getting on that call that there is an area that you can connect the dots between your company and the fund.
Perfect. Any last questions from anyone else? Okay. Well, I wanted to thank everyone here for joining in our conversation today. It was very insightful. I really appreciate Leib for taking the time out of his busy day also to make a presentation, share it, and share insights as well, and also to give advice. That's very, very kind of him, and we definitely appreciate it. And we also appreciate everything he does for the Israeli ecosystem, within Israel and also around the U.S. So that's definitely appreciative of all of us. So I definitely wanted to say a big thank you to you, and then to everyone else for joining the call today.
Thank you, guys. All the best.
Thank you.